Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look as we head into the weekend on the dollar versus yen. What levels are in play? What are the biases? Where are the risks? Where do we stand from a technical perspective? I'll talk about all that in this video, so let's get started. Starting with the daily chart, the high price in trading today in the dollar versus yen reached 151.85. That was just short of the 151.91 high price that we saw in 2023 and just short of the 151.945 level that we saw in 2022. So 1, 2, 3 highs all within about 10 pips of each other in different years. That's pretty key level up there at those triple high. The question then comes, what's ahead? What's above that level if we do break above that triple high? To look at that, you typically just look further back in time, and for that you have to go to the monthly chart. Why? Because it goes all the way back to this period right here, which is 1990, folks. So over 3 decades ago was the last time the price of the dollar versus yen traded as high as 151.94 type level, and so getting above that level puts it really into no man's land for this currency pair. By the way, the high price right here, just looking back in time, comes in at 151.90. So it too is within the range of the 151.85 to 151.95 level that we are currently in. So 4 different tops over the last 3+ decades. How about that? The high price that I have on this chart for this pair, next high price, I guess, comes in at 160.504. Now the dollar yen obviously went much higher than these levels going back in time, but it's still pretty impressive. 30+ year high being tested in the dollar versus yen. We'll see if it can break through next week. Now going back to the hourly chart here, what has happened at the high prices this week? Well, we had one high that came up to around the 81 level. We had another high that came up to the 85 level in trading here today. And we've seen a rotation to the downside. On Wednesday, the price was a little bit more pronounced as the market moved quickly to the downside off of the FOMC, and then we had the rotation back to the upside, and now we're seeing a rotation back to the downside. On the downside, we do have the rising 100-hour moving average at 150.944 as a level to get to and through. But really, I'm going to pay attention to this area right through here, this area between the 150.73 level and 150.87 or 89 level on the top side. That level corresponds with all these different high prices going back in time. High price, swing high right here, swing high here, swing high here, swing high here, here, before the market moved to the downside. And trading a few weeks ago, the price trading above and below this level, and then use this level as support before moving to the upside. In trading, actually these are levels this week. This is the hourly chart. We came down to that level, bounced back higher, then moved down below that level, and it looked like things were going to break to the downside here, but then rebounded back to the upside and started to use this area as a support in trading yesterday before moving higher. So getting below this area here between 150.72 and 150.88, 89 is going to be what needs to happen in order to probably give the sellers a little bit more confidence that they can push lower, in which case we'll see if they can head down toward the 50%, 61.8, and maybe even go and test the rising 200-hour moving average. But remember, this is going to be moving steadily to the upside. So by Monday, Tuesday, the moving average should be up toward the 61.8% retracement. So be aware of that. So overall, we have this ceiling in place at 3-decade highs up to 151.95. On the downside, look for the 100-hour moving average in the swing area down to 150.72 for potential support. If it breaks below that level, it opens the door for further downside pressure in the dollar versus yen next week. See how this goes. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.